Hello, welcome back. I'm with Peter Beckney, the manager of Corp Dev and IR at Gold Royalty. Peter, good to see you again.
Yeah, good to be here, Peter. Thanks for having me.
That's okay. Obviously, we've done a few updates, one with yourself, one with David, but for those who potentially haven't seen those, quick overview as to who you are.
Yeah, so Gold Royalty, we're still a relatively new royalty and streaming company. We IPO'd just over 2 years ago on the New York Stock Exchange. Since then, we've grown rapidly. We had 18 royalties when we IPO'd in March 2021. Today, we've got over 220 royalties. We've grown through consolidation, royalty financings, third-party acquisitions, and built a really robust portfolio now.
Agreed. Well, just before we go into that and sort of the growth pipeline that's going on at the moment, run us through the capital structure. Just give us a bit of an update as to how that looks.
Yeah, so simple capital structure, about 144 million shares outstanding, market cap just under 300 million US right now, minimal debt on the balance sheet. We've got a credit facility with BMO and National Bank, just under $10 million drawn on that, and a strong balance sheet, another $10 million in cash and marketable securities.
Good, okay. Well, what's happened since we sat down with David in, was it November?
Yeah, so since last fall, it's been a tough equity market, but fundamentally the company's in a much stronger place than it's ever been. The key assets fueling our growth, fueling our value are continuing to be advanced, and we're now just 7 months away from seeing some of those key assets start to enter production.
It's funny, actually, I wanted to talk to you. Obviously, we're in this bit of an awkward market at the moment where we're actually seeing sell-in on good news with some equities, and it's becoming exceedingly hard for companies to raise capital. I'm assuming for you this is a pretty great opportunity for Gold Royalty to potentially get their hands on some new assets. How's the BD side of the company looking?
Of the business, yeah, we're as busy as we've ever been evaluating opportunities. I think with that, the soft equity market, the royalty companies, especially the smaller caps, haven't been immune to it. So we have to be disciplined with how we allocate our capital and what opportunities we want to pursue seriously. But with that said, you're completely right. Equity markets are practically shut to a lot of smaller equity or smaller issuers on the exploration side of the business, and royalty and stream financing just makes a lot more sense from a dilution standpoint for them.
Good. Okay. Well, I really like this story for a few reasons. There's a huge growth profile, around 60% per annum over the next couple of years, or 3-4 years, and then there's also you look as though you're probably the most discounted on a NAV to price ratio as well. I mean, run us through the fundamentals, and maybe could you just talk us through what the growth pipeline looks like, because your revenue is increasing year on year quite substantially now. So maybe just run through how it looks at the moment in terms of portfolio and how that growth is expected to increase over the next few years.
Yeah, it's a good point on the disconnect in our valuation right now. It's been frustrating, but it does just speak to the opportunity in Gold Royalty's stock right now. We're trading closer to 0.5 times net asset value in the face of continued positive news on the key assets driving forward our business. Over half of our net asset value is underpinned by 3 generational assets. The first and foremost being a royalty on the Canadian Meltic mine, which Agnico just put out a great update this morning on their updated mine plan. We're very excited about that asset. The other 2 cornerstone royalties we have are a royalty over the Côté Gold Project in Ontario and a royalty over the Goldstrike mine, specifically the Ren Underground Project at Goldstrike. So multi-generational assets, 3 of the largest gold mines in North America, and they continue to be advanced on time, on budget, and now we're just, in the case of Côté, starting to enter production early next year. So we see positive news quarter over quarter, and the share price really isn't cooperating. So.
But these mines as well, these are owned by world-class operators as well, right? I mean, you've got Agnico Eagle there, IAMGOLD, Barrick. If you are going to be building mines of this scale, you're working with the right sort of partners there.
Absolutely. I think that's one of the critiques we hear is, there's development risk inherent in these portfolios. Well, these are the largest producers in the world, established producers, great balance sheets, well capitalized to deliver on that timeline. And now with Côté 80% over complete construction, Odyssey started production from the underground in March of this year, and Ren continuing to be drilled and expanded. I think that development risk is significantly reduced given these assets.
You mentioned Agnico have just released an update on Meltic. I haven't actually seen that yet, so tell me about it. What's happening?
Well, I was busy with meetings here too, and I was digesting it in between. But at a first glance, it's really all the positives that we knew were coming down the pipeline, given the amount of drilling and investment they had there. 23% increase in payable ounces from the overall mine plan. Now our royalty at Canadian Malartic covers a portion of the deposit, specifically the East Malartic deposit, Odyssey North, and then a portion of the internal zones in the Nori zone. And not to get too specific, but really this was another positive catalyst, seeing increased resource conversion into the mine plan. And one of the areas of upside that they still haven't tapped into at the overall Canadian Malartic complex is the excess mill capacity. This updated mine plan still leaves 40,000 tons per day of excess mill capacity as they shift from a fully open pit to an underground operation. So chance for increased resource conversion and increased annual production given those areas of upside.
Okay, perfect. Can you just run us through, well, obviously you're talking about this disconnect with your valuation at the moment. Can you just run us through, I guess, the next couple of years in terms of the revenue growth that you're expecting and really how Gold Royalty is going to be evolving over the next few years?
Yeah, so those three key development stage assets I mentioned, Côté, Ren, Odyssey, are the key drivers of that revenue growth over the next 5 years. Côté entering production in 2024, ramping up next year, and having that full year of production in 2025, we'll see our revenue profile go into the $12 million range in 2024 based on consensus estimates. And that also steps us into a strong free cash flow position starting next year. Beyond that, we've had a team on site down at Ren, and we could see that asset enter production by the end of 2025 towards 2026. We have a 1.5% NSR there over the entire Ren project, and that'll be another similar size step change in 2025 and 2026. Beyond 2027, 2028 is when the Odyssey project really starts to ramp up as an underground operation where we have our increased coverage. The updated report today outlined initial production from Odyssey North in 2028 and from East Malartic in 2030, and the potential for the internal zones to come in even before then. So year over year, we're seeing Côté come online next year, Ren the next 2 years, and Odyssey really ramping up in the last few years of this decade, really underpinning our growth.
And outside of these sort of three core generational assets, you actually have quite a strong development pipeline as well, right? And I wouldn't mind you just touching on that, because I think with royalty companies, I think a lot of people that look at royalty, it's a good hedge. That you're hedging against inflation as well, with obviously not having the operating costs burdened on yourselves.
Yep.
If someone's looking at this as a 5-year investment or even longer, what can we see post that? What else is in the development pipeline that's going to be emerging?
So yeah, beyond those three cornerstone assets, the optionality, the exploration upside, and that tail of other development, advanced exploration, and early exploration stage assets we have in our portfolio is really what makes our business model so special. Beyond those three cornerstone assets, we've got a dozen other smaller development stage assets that are coming online, supplementing that revenue growth over the next several years. Assets such as the Gold Rock mine in Nevada, Railroad Pinion, which Orla just picked up, Isabella Pearl, just to name a few. And we've got several other assets like that fueling our growth over the next few years. But beyond those development stage assets, with over 150 early exploration stage assets, we've got significant exploration optionality embedded in the portfolio. In 2022, there was over 700,000 meters of drilling completed across all of our assets. Based on 2023 exploration plans, we're expecting another 600,000 meters of drilling this year, and we get the benefit of that at no cost to Gold Royalty Corp. We never have to put a cent in the ground, and all of that increased exploration investment, resource growth, mine life extensions, we benefit from that for free. And it's really the beauty of this model.
So in an ideal scenario, we meet back here next year in Quebec. What would you like to be able to tell me if all goes well?
Yeah, well, I really feel that Gold Royalty is at an inflection point in the company right now. We've gone from 18 royalties 2 years ago, gone kind of through a startup phase, and we've really transitioned and built a very sustainable business for the next several decades. And starting next year, we see Côté entering production, the company entering strong free cash flow, and I'd like to think that's the catalyst to really see us re-rate back up in line with our peers and really become that more mature and growing royalty company that we've built.
Perfect. Peter, thank you for your time.
Yeah, thank you very much, Peter.